Welcome to our lesson today on taxation of individuals or the employment income by Dr. Maina Justus. Feel free to ask any question regarding this lesson on the comment section. Welcome. The running outcome for the lessons are that at the end of the lesson, you should be able to 1. Explain the concept of pay as you earn. Number 2. Discuss the components of employment income. What is pay as you earn? Pay as you earn is a method of collecting tax from individuals, both resident and non-resident, in gainful employment. It is charged on employment income, and the employer is required by law to compute, deduct, account, and remit the tax to the Commissioner of Domestic Taxes on a monthly basis. A note: the amount charged and deducted must be paid to the Commissioner of the domestic taxes on or before the 9th of the preceding month. What are the components of the employment income? Employment income constitutes 1. The cash benefits, 2. The non-cash benefits. We start with the cash benefits, and this includes 1. Remuneration, whereby it also includes wages, salaries, leave pay, sick pay, payment in lieu of leave, director's fees, overtime, commission, bonus, gratuity, compensation for the termination of any contract of employment or service, etc. Number 2 is the allowances. The following allowances are deemed to be the employment income and are therefore chargeable to tax and a PAYE. 1 is the housing allowance. We have the sitting allowance, medical allowance, mileage allowance, entertainment allowance, special duty allowance, transport allowance, school fees paid by employer for an employee dependent. Number 2 of the components of employment income is the non-cash benefits. These are employment benefits which are enjoyed in kind. The chargeable value of benefit or advantages of facilities granted or services rendered to a person by virtue of employment should be charged to tax at the higher cost to the employer or fair market value or the commissioner's prescribed rate. This benefit includes: we can have 1. The motor vehicle benefit, where employer has provided a motor vehicle to an employee for his or her own use. The chargeable benefit shall be the higher of the prescribed rate of the commissioner or the cost of hiring or leasing the vehicle by the employer. Currently, the commissioner prescribed rate is 2% per month of the cost of the vehicle. That is, the higher of 1. The quantified prescribed benefit by the commissioner based on the CC rating. 2. The 24% per annum of the cost of the motor vehicle. Then we have another benefit, which is a fringe benefit. This should be paid by the employer in respect of loans provided to an employee, an interest rate lower than the market rate. The value of the fringe benefit is the difference between the interest that would have been payable on the loan at the market interest rate and the actual interest paid. Then you have the insurance cover benefit. An amount paid to an insurance company by an employer for the cover of an employee where there is no group insurance policy scheme is taxable. Also, we have the domestic servant benefit. An amount paid for the servants of an employee by the employer are chargeable to tax on the employees as a benefit. You also have the security service benefit. An amount paid for the security of an employee by an employer are chargeable to tax on the employee as a benefit accruing from the office of employment. Finally, we have the housing benefit, and we say that the value of housing provided to an employee should be taxed at the higher of 1. 15% of total employment income, that is including allowances and other benefits. Number 2, fair market rental value of the premises. Number 3, rent paid by the employer. The following amounts are not subject to tax. 1 is the first Kenya shillings 2,000 of the daily per diem. And we say that any amount in excess of Kenya shillings 2,000 is chargeable unless there is evidence that the amount paid is a reimbursement of expenses. Number 2, where a benefit is below Kenya shillings 3,000 per month or Kenya shillings 36,000 per year. Number 3 is the meals provided to employees up to Kenya shillings 48,000 per employee per year or Kenya shillings 4,000 per month. Thank you for listening. Always your learning partner, Dr. Maina Justus. Remember to subscribe. Thank you very much.